Looking for strategies to help you protect your portfolio in these uncertain times? Visit robblack.com. robblack.com, powered by EP Wealth.
February 10th, 2026. I'd say another day, another dollar, but a little cliche. We started off a little bit stronger today. As the morning's gone on, a little bit of give back. The S&P 500 is now up 2 points. Basically sideways, up 0.04%. The Dow Jones Industrial Average up 185. That's up 1/3 of 1%. All-time high, though, 50,321. The NASDAQ down 20, down fractions, sitting at 23,216. The Russell 2000 up 7, up 1/4%. So we have mixed markets. I think the tell there is the Dow Jones Industrial Average is having a day where it's outperforming in large part due to its diversification. I want to be careful that I never say the words diversification because that was the 1990s and it was just silly then as it is now. So names like Disney, American Express, and Goldman Sachs are helping the Dow Jones Industrial Average hit another all-time high. Its third consecutive intraday record. Investors are awaiting the big jobs report on Wednesday. That's tomorrow morning, and the consumer price index on Friday. So we're off and running. One thing I want to mention on positive light, because I oftentimes forget that I want to do some consumer stuff on the show as well, you know? Mr. Beast is buying Generation Z focused fintech app called Step, which is a teen focused banking app. 7 million plus users. It offers financial services geared towards Generation Z to help them build credit, save money, and invest. Celebrities like Charlie D'Amelio, Will Smith, Steph Curry are all celebrity investors. Mr. Beast, a.k.a. Jimmy Donaldson, is the most subscribed creator on YouTube with over 466 million subscribers. I'll take a look at that today because my kids have been asking me about bank accounts and credit cards, and they're 15 and 17. And I think it's great to have a bank account long term, but I think it's more important, instead of going with like a Bank of America or Wells Fargo for them, maybe go with Mr. Beast's bank, if it is a bank. It's teen focused, called Step. It's one of the reasons I believe in the long term of Robinhood. It's Generation Z, what they're going to be using, not this year, but for the next 40 years. Yesterday, Alphabet announced plans to introduce its first 100-year bond sale. It's the first one overall in tech since the dot-com era of 1997 when Motorola did it. Flashing forward 28 years, it's an interesting note. Is Motorola still a 100-year type of company in your mind versus back then? I don't think it is. Will they be around in 75 plus more years? I think it's more of a question now than it was in 1997. So today we saw holiday retail sales disappoint. Listen closely. Consumer activity slowed sharply for the December holiday shopping period. Reasons include a spate of rough weather. I got stuck in the mountains, for instance. Tariff impact and persistently high inflation. Retail sales were flat. They were up 0.6% in November. So on a month-to-month level, they decreased. On an annual level for December, sales were 2.4%, which was a considerable step down on a year-over-year level, December, from the 3.3% pace in November. So it's a downbeat end to an otherwise solid year for shopping activity. Higher-end consumers are spending briskly. We see that. Whereas the lower end of the income spectrum, a lot more cautious. This is the K-shaped economy, and it should reflect your investment thesis. Do you hate some of the photos that PR groups use? There's one from, I guess, the inauguration, where you see Mark Zuckerberg, Jeff Bezos, his wife, Sundar Pichai from Google, and Elon Musk. They're all in one row, and behind them it looks like senators or congressmen. But Mark Zuckerberg kind of looks like he has no chin. He kind of looks like Beaker. And then you see the other people, and you're like, whoa, This is just an odd photo. And I think there's something to be said about odd photos painting our brains with images that are inappropriate or mind-bending towards opinions. Bitcoin is down 41 points today, fractionally down to 69,412. Bitcoin's competing with gold. Gold is performing well. Bitcoin is not. A lot of people think maybe investors have lost their focus after 10 years on Bitcoin to AI. I can see some of that. Ethereum, which should be used in financial institutions closing financial transactions, they're still struggling. They're sitting around 2,000, down 1.3%, sitting on 27 points. I think both of these, Ethereum and Bitcoin ETFs, could be used as trading vehicles. If you want to go investment, I think you're going really long term. So 1% to 5% is the most you should do of your total net worth. I can make that case for my children. I can't make that case for myself. Because if they do 1%, 2%, 3%, as long as they're in the S&P 500 with a large chunk of their money, some mid-cap, small-cap, international, some income, those assets should all work over time and blend the results and potentially help companies and institutions' investment ideas like Bitcoin. 10-year Treasury sits at 4.13%, moving quickly closer to 4%. For most of the last 3 to 5 sessions, it's been right around 4.2%. Gold is down $42 a day, down 90 basis points, down almost 1%, sitting at 5,037, holding that big round number of 5,000. Silver's down $2, down 2.5%, sitting at $80.16. Brent crude is sitting at $68.86. When I see numbers like that, I instantly go, do I have problems with my IB4Es, just before Cs? Do I have problems with spotting numbers? Because you don't usually see 6886. Am I dyslexic? I have a form of dyslexia, but not the IB4E one. So mine is tied towards visuals. Very similar to my child. He has the same thing. So that if I ever see a rowboat without a row, I go, it's a rowboat. If I ever see bikes without spokes, I go, it's a bike. If I see a car without missing a wheel, sometimes I'll quickly say it's a car. But if I look closely, I see all the incorrect images. But sometimes I sift through those. And I've been able to wisely develop crutches around it. It's painful watching my kid because neither one of us could do book text learning on foreign languages. We have to go to the country to learn the language. It's a different type of brain power of imaging versus memory on imaging. So Microsoft is exploring using advanced power lines to make data centers more energy efficient. That's good news. Just to me, that seems, why haven't we been doing that before this? See what I'm saying? Some goods will come out of this. Coca-Cola is sinking on a disappointing outlook despite surprise sales jump, down 2%. I would look at Coca-Cola. I would look at it for income because I'm over 50 years old. And as I get older, I'm going to want, what's not going to go out of business in my lifetime? Now, the moment I buy Coca-Cola would be the moment that someone says, it causes cancer or something, That would be my bad luck. It's got a dividend yield of 2.62%. Not too shabby. Now, when I take a look at the chart of the stock, it's had a big recent run. I'm not going to lie to you, and that's concerning to me. So since January 6th of 2026, it's gone from $67 to $76. That's a big jump for this stock. A good 10% move plus that dividend. Hoo-wee, that's sweet. But it went through a whole year of going sideways, which we're seeing in the charts of McDonald's. We're seeing in the charts of Chipotle, where things that we don't have to have, as far as food goes, as far as consumption goes, we can cut back on. Now let's take a look at a 5-year chart on Coca-Cola. Now this one looks better. In the last year, it's gone sideways until it recently broke out. Before that, it went sideways from 2023 through 2024 before it broke out. There's a history here where it goes sideways, consolidates, and breaks out. So right now it's in new air, new territory. And I would expect 3 to 4 months just looking at the chart of going sideways. Maybe 5 or 6 months. Take a look at the chart of Coca-Cola and see if you don't see what I see. Typically, there's a dip where you get to buy like there was in 2024, late 2024, late 2023, late 2022. It's almost okay. So I think that could be a shopping list stock, if you will. I'm not saying you should. I'm saying if you will. Let's talk about more stuff that we're seeing out there. Sorry, I'm not getting through my content fast enough today. OpenAI co-founder Andrej Karpathy, he coined vibe coding. He says agentic engineering is next. Whereas vibe coding is when humans ask AI to write code, agentic engineering is when AI writes code on its own. The grid. Elon Musk got a lot of government money to improve the EV fast charging stations. And he threw down some of Tesla's money to do it. And it took, in my area, probably 12 to 15 months from start to finish of the project. Putting in a fast charger that does high-speed charging in locations. It's getting power from the grid. It takes months. Whereas there's a new company called Electric Fish, which is developing a new EV fast charger to allow high-speed charging in remote locations. Its system uses a built-in battery storage, meaning it pulls less power from the grid and can be installed in weeks versus months. What does the modern milkman do now that he's no longer delivering milk? A UK dairy delivery service is going to start collecting unwanted toys and electronics for recycling when it drops off grocery items. I love the idea of an Instacart saying, we're going to do this. Not only will we bring you groceries or Grubhub or Uber Eats, but if you leave out in a box some of your old phones or some of your old wires or toys that you want to give to Toys for Tots, we can cut down on metric tons of electronic waste annually. Is it something I would invest in? Probably not. Because usually when we do great things like this, it's not terribly profitable. Bank of America CEO Brian Moynihan, he was on CNBC today. You know, I talked about retail numbers being disappointing for December and on a year-over-year level showing a slowing. He talks about January. That's one of the reasons I love having Google alerts on people like Brian Moynihan, CEO of Bank of America. He says retail consumers spent 5% more in January 2026 versus January of 2025. That number is very consistent with strong economic growth. He said the company continues to spend a lot on technology, so does Bank of America. That retail consumers spent 5% more in January versus January of 2025. That number is very consistent. December retail sales were impacted by how the calendar fell. All income levels are growing spending, just at different levels. The focus should be on what consumers are doing, not how they're feeling. Consumers are being very careful where they can. That makes me feel a little bit better about my investment thesis of stay in the market. NVIDIA, Broadcom, Taiwan Semiconductor. All eyes are on those companies. Taiwan Semiconductor reported earnings. January sales increased 37% year over year. Artificial demand is still there. It is a lot choosier as the hyperscalers are moving from let's spend our free cash flow on AI infrastructure to let's borrow money to spend on AI infrastructure. Because other companies can't keep up with us, other countries can't keep up with us, other governments can't keep up with us. And that's why a company like Alphabet's doing a 100-year bond. Is it concerning? It is a concern. It's not a reason to cancel your thesis, but it is a concern on your thesis. And maybe it brings in that cracking point a little bit closer on when we move from hypergrowth of NVIDIA, which I think we've moved out of into the growth phase, where it's not growing 60 to 100% year over year. We're going to look more for 20 to 60% year over year. DuPont shares are higher after better than expected fourth quarter. The company beat on net sales, EBITDA, earnings before interest, tax, depreciation, and amortization. They also beat on adjusted earnings per share, so it was a good, broad-based, clean beat. I don't own any shares of DuPont, but I do pay attention to what we're using in our chemicals and where those are going into our cars and our phones. What's the cost? What's the margins? How's the health of the overall industry? How many people does the industry employ? CVS reported a strong fourth quarter. A drugstore chain reiterated its full-year earnings per share outlook of $7 to $7.20. Expectations were for about $7.10. It's one of those healthcare names that I can't quite get to. Even if it's a retail healthcare, and I go, oh, it's a retail healthcare. It's just, I can have it in an S&P 500 fund. I personally can't own that individual name unless they were to crater, and I'd see a buying opportunity as a trade. Texas Roadhouse was downgraded to hold from buy. A lot of beef inflation going to persist through 2027, they say. That concerns me because I've got a 15-year-old and 17-year-old. Wingstop was downgraded at TD Cowen on expectations of a difficult same-store sales setup for 2026. If we're not eating beef at Texas Roadhouse, might we be eating chicken at Wingstop? For the record, I've been to a Wingstop before when my kids were doing a tutoring or private training in sports where I have to kill an hour or 2 hours. That food is disgusting. I'm a bit of a food snob. Okay, I got that out of the way. Bernstein raised its price target on Apple to $340 from $325. They kept a buy rating on the shares. They've pointed to strong iPhone cycle. They argue that rising memory prices shouldn't be an issue for the tech company in the near term, as a lot of their contracts are more long term. But there will be about a year until memory prices start coming down. I think 2027, 2028, where they are going to have to deal with that. And I would expect higher prices. Or for Apple to say, we're going to put in a weaker camera. Or for Apple to say, we're going to put in a stronger camera with higher margins. And that'll eat. They're not stupid. Be careful when you think companies are stupid. Take-Two Interactive was rated a strong buy by Raymond James. I used to not like Raymond James, and I had a really funny reason for it. As I got out of college and I was starting my business and I was doing side jobs, I knew a lot of people who were coming out of college and doing side jobs as they got into their career. And one of my friends, Jason Dunn, we called him the Dunner. Stupid. But he was good with girls, if that makes any sense. Really good looking dude and had a nice car. But he went to work for Raymond James. I was like, they'll basically hire anyone, won't they? He was a bit of a himbo. Do you remember the term himbo? Anyway, Take-Two Interactive is down 15% since January 29th. It looks like there is a chance that they're going to get Grand Theft Auto out by the end of the year. My kid will get it. My kid will spend hundreds of dollars on it. Raymond James left their price target unchanged at $285 on the stock. So I'd watch a little gaming alerts on Grand Theft Auto. And does it look like it's going to be delayed and or not? It's been delayed for years. And it's one of those products that'll make $100 billion. It's one of those products that will make billions and billions and billions of dollars and beat out any movie of that year. That's impressive. Now, the amount of people working on it are more than a movie over the last 10 years since the last version of the game came out. But the last version of the game still has been upgraded with graphics and upgraded with more downloadable features. So they've been milking that franchise. The new hardware, the Xbox Series X and the PlayStation 5, they've been out for 5+ years without the new game to drive them. Tesla's going to spend more money on solar manufacturing. Morgan Stanley loves this. Tesla Solar could add $20 billion to $50 billion of equity value to the Tesla energy valuation. They think that's worth $140 billion over at Morgan Stanley. I noticed that Elon Musk and SpaceX are pivoting towards landing on the moon and setting up a base on the moon because Mars is going to be more difficult. And when you're an IPO company coming out this June, you're really going to have to start showing, oh, we've got revenue here and we've got great results here. And that manned mission we sent to Mars, everyone died. The easier fruit to pick off the tree would be the moon versus Mars. I don't think Elon Musk is stupid, but I don't think he's got enough to deliver to hold up those valuations. Other than it's the riskiest stock that you own. Because he is really aiming for the stars and the moon, literally. Bank of America raised their price target on Caterpillar to $825 from $735. Strong turbine demand for AI data centers. Stock has had a stellar year this year, up 29% year to date. It was one of the very first stocks I bought probably about 8 years ago for income and retirement. I've done really well with the stock almost as well as AI stocks. But I bought it for the dividend, and I'm holding it for the dividend, if that makes any sense for it to you. I have 2 more segments for you today. Plus, I have an event coming up, Beyond the Noise, Navigating Wealth in Uncertain Times. Wednesday, March 11th, 6:30 to 8:30, Lafayette Library, 3491 Mount Diablo Boulevard, Lafayette, California. You can sign up today at robblackshow.com. It's March 11th. Stephanie Richman, Nathan Rogers will be presenting 6:30 to 8:30 at the Lafayette Library. Lafayette Library, March 11th, 6:30 to 8:30. Stephanie and Nathan. Should be a good event. I'll be there as well, talking economy and stocks. We'll take a break here. We'll be right back with segment 2.
You are listening to the Rob Black Show podcast. For more information on EP Wealth, visit robblack.com. That's robblack.com.
Taking a look at the markets right now, as they've been open for a while now, a couple hours. The S&P 500's up 9 points, up 0.1%. The Dow's up 263 points, up 0.5%. The Nasdaq's up fractionally, 13 points. The Russell 2000's up 11, up 0.4%. I like that. It's a diversified market. It's not just tech. We're seeing the Dow Jones Industrial Average with American Express, with Goldman Sachs, and with other names do quite well today, up 0.5%. It's a big move. When I was 10 years old, we didn't see 0.5% in one day. It was a much calmer market. I acknowledge that, and I don't have to have instant gratification. I looked at my net worth yesterday. It was at an all-time high. I feel good about that. My spending tends to focus heavily on the back end of the year. There's a lot of schooling through the first 9 months, but I feel like I've gotten through the most expensive part of the last 12 months. And maybe that's how you think as well. It's not a bad idea, if that makes sense. Let's talk about some of the other stocks that are out there today. We last left off really talking about Caterpillar getting an upgrade price target to 825 from 735. Talking about that being an AI data center and infrastructure play. Well, Vistra also is, and they were upgraded at Jefferies to a buy from a hold with a price target of 203, up from 191. They see the risk reward favoring you right now after a 25% pullback since September. Jeffrey says the shares at the current levels aren't pricing in the company's future data center contracts. Harley Davidson, put your ass on some class. That was one of their mottos that always struck me as, that's an interesting way to market. Not the way I would market, but it's an interesting way to market. They posted a loss per share more than twice as bad as Wall Street had expected. To me, I've never really wanted a Harley Davidson. That whole putting my ass on class wasn't my shtick. I would say it was for people 10 to 20 years older than me. That as they aged, they got to the point of like, this is going to be my youth again. And there's a declining trend of sales for motorcycles. Shipments fell 4% in the fourth quarter from the year prior. Analysts had anticipated a 22% increase. That's a massive turn. Harley's full-year gross margin was about 4 percentage points lower year-over-year. Decline, the company said, was driven by tariffs. It's going to be an interesting next couple of months on the market as the Supreme Court deals with tariffs, as refunds start rolling in from the IRS, and as corporations are finding, look, we're getting treated pretty favorably in our tax treatment. We're paying less tax for 2025 than we thought because of the one big, beautiful bill. Tech sector's biggest winners right now are swapping places with the losers. The iShares expanded tech software ETF, ticker symbol IGVs, up 1.7% today. Big gains by Datadog, ticker symbol DDOG. Software is getting disrupted by AI for sure. But these companies are going to be implementing software into their services, AI software into their, they're going to be introducing AI services into their software. So the software companies, it's not as bad as the stocks are looking, but it's probably a real threat that you should take seriously. So Datadog, ticker symbol DDOG, up 16%. Oracle up 3.5% today. ServiceNow up 3.3%. You would almost call this a dead cat bounce, because the opposite side, Micron's down 2.3%, SanDisk down 4.6%, Seagate down 5.7%. Western Digital down 7.8%, selling off the big recent win and going after buying into the big recent sell. Paramount, once again, is enhancing its Warner Brothers bid without boosting its per share offer. Paramount is trying to vault Warner into number one position for the Warner Brothers Discovery acquisition ahead of Netflix. The company beefed up its bid by adding an incremental payout if its deal closing were to be too slow, as well as offering to cover breakup expenses if Warner Brothers Discovery's tie-up with Netflix were to end. Paramount did stop short of raising its $30 per share value offer on the acquisition. Something tells me this one's not quite over yet. Spotify is up 15% today. Stock we've been talking about in the last 6 months of acquiring because it hits everything that I want. Total addressable market of 100 million plus users. Not a lot of competition. A future of kids today using the product. There's 3 music services that I look at. There's Spotify, there's Apple Music, and there's Google's YouTube Music. And that's really it in my world. Now, let's talk a little bit more about this. We just talked about Netflix, and they are the total addressable market in television streaming. Spotify is top dog in music streaming. Now, YouTube TV has to pay the cable channels, but YouTube itself gets most of their content for free. Whereas Spotify will never get most of their content for free because they have to pay the artist. Every time you stream, they're paying the artist. Maybe not a lot, but they have to increase their premium subscribers. Spotify also does ads. Spotify said it added more than 38 million monthly active users, a quarterly record that brought its total to 751 million. Analysts expected 744 million. So it was better than expected. Paying subscribers grew 10% to 290 million. Better than expectations. Revenue for the quarter grew 7%. It fell largely in line with expectations. 33.1% gross margin was a new company record. When you have 100 million subscribers plus, you got to figure out, how do I get my margins higher? And they did. The streamer guided for 293 million premium subscribers in the first quarter compared to expectations of 293.5. They raised their U.S. subscription prices, and that's how they raised their margins. I've got a kid who uses it. I've got a kid who uses Apple Music. I've got a smart kid and I've got a dumb kid. My smart kid uses Apple Music. My dumb one uses Spotify because that's what the other kids at school use. My smart one's like, he realizes we pay for an Apple family subscription and he's trying to put his money where his mouth is. I agree with that. So Spotify is going to get a re-rating for its risk to reward profile. The company has successfully shown a profit point for its multi-vertical strategy. Its first quarter revenue outlook was characteristically conservative. As long as the company maintains its disciplined operating expenses and leverages its creators, it can continue to hold this level and move higher. I think Spotify will take out its all-time high. It's a stock that I've told you about to buy. And a lot of these companies, I tell you to buy 20 to 30 to 40% off their highs. And this is one that fell 30% from its recent highs, as has Microsoft. And I tell you what I'm buying and why I'm buying it. And I don't need 30 new stocks on my list. I need 3 to 5 that you've never heard about, but 10 to 15 you have. And the 10 to 15, when they pull back, that's when I become more interested. So back to the big tech titans. The build-out of artificial intelligence data centers, along with business-friendly provisions in President Trump's One Big Beautiful Bill, combining to make 2025 a banner tax year for big tech. Some of the new provisions offer deferrals, meaning tax bills may be higher down the road, but the changes are set up to add billions to these companies' bottom lines now. So Amazon, Meta, Alphabet, they filed annual reports to the government and all reported significant drops in what they expect to pay the U.S. federal income taxes. Amazon's tax bill dropped from about $9 billion to about $1.2 billion from 2024 to 2025. Meta's tax bill dropped from about $9.6 billion in 2024 to $2.8 billion in 2025. Alphabet showed a drop of $21.1 billion in taxes down to $13.8 $8 billion in taxes in 2025. So I try to put my money where my mouth is and show you all that I can, and I hope that works out well. Hasbro is playing to win as record margins. Again, margins. And they've got growth in Wizards propelling their fourth quarter results. Revenue growth accelerated to 31%, the company's strongest quarterly growth in over 4 years. Hasbro is firmly backing a growth trajectory. They have a in-house phrase that gets their employees motivated called playing to win. It's a strategic roadmap trying to turn around the company into a new era of profitability and digital first play. Revenue increased 31% year over year to $1.5 billion. They've got the Wizards of the Coast and digital gaming segment, which saw revenue jump 86%, tied towards Magic the Gathering, 141% explosion in Magic the Gathering. Massive success of Avatar, The Last Airbender, and Final Fantasy holiday releases. Hasbro will become the global primary toy licensee for the world of Harry Potter and the upcoming HBO original Harry Potter series, a move expected to significantly scale the company's multi-generational appeal. Demonstrating confidence in its cash flow durability, the board has authorized a $1 billion share repurchase program. I can dip into Hasbro just as easily as I could dip into talking about tech stocks. Just throwing that down there for you. Coca-Cola delivered an encouraging demand read-through this quarter. Volume stayed positive for a second consecutive quarter. The quarter still reinforces Coca-Cola's defensive profile with strong cash generation, long-standing dividend. Incoming CEO Henri Braun, he reiterated 3 priorities. And the big focus for the company is for investors to remain on volumes as Coca-Cola expects pricing to normalize in 2026, putting focus on how it can support volumes to drive growth rather than leaning on pricing as it's doing now. Revenue shortfall has had a strong run. A little bit more on Taiwan Semiconductor's quarter. Their revenues jumped 37% after the Taiwanese chipmaker reported. Just a great quarter. That leap is way above the company's full-year growth outlook of 30%. Much of the rise is fueled by booming demand for advanced AI chips made for customers, including NVIDIA and Apple. Taiwan Semiconductor revealed plans to spend $52 billion to $56 billion in capital expenditures for 2026, up sharply from $40 billion in 2025. Rip-roaring fourth quarter tied towards AI. Again, the death of AI is greatly exaggerated. I would watch for companies with debt. I'm not saying no to them. I'm saying watch. And I would look for companies to potentially jump into your favorites when they're 20, 30, 40% off their all-time highs. Tesla is a 500-mile vehicle. Been quoting the price of its long-awaited long-range semiconductor truck at $290,000. That's a significant increase from the original price of $180,000, roughly 60% higher. It's still well below the industry average for a Class 8 electric semi-truck. It's designed for autonomy. There's a company called Aurora Technology that has a similar self-driving vehicle. How will Tesla compare? That's a good question. But it's a 500-mile long-range semi, priced at $290,000. We got a great big convoy trucking down the line. I know you're saying, please, Robert, never ever sing again. I'll try not to. But I do love doing this show. Now is the time to start designing what your retirement is going to look like. I believe I'm technically 5 years to 10 years from retirement. And I don't have a lot of friends. And oh boy, I had a friend this weekend. I was like, I want my Super Bowl singer to speak English. And I'm like, dude, you realize there's 7 continents on this planet. There's more than one language. There's multiple languages. There's music around the world. The NFL does games in Barcelona for a reason. In Mexico for a reason. In Germany for a reason. UK for you because they're trying to grow their brand. Anyway, this guy just went political on me, and it was too much. He started talking about ice, and ice I don't know what my retirement's going to look like, and I don't know what my friends are going to look like, The year before retirement, you should treat it as a period of reorientation when you start focusing from abstract values on your financial statements to what's your lifestyle and sustainability going to look like. Working with a financial planner has been one of the best things in my life, as it's taken a lot of pressure off me to prove to my spouse, what our plans are. No matter what, I can save a child's life with open heart surgery with a pencil, and she's still going to doubt my abilities to manage a cold or flu. So even I have the doubt of the spouse, even though I've been in this industry for 30 years, and a lot of it's rubbed off, to say the least. But working with a financial planner is, to me, fantastic. So as I head towards retirement, that's one of the things he reminds me of. Paychecks are going to stop, Rob. You need travel plans, you need hobbies, you need family support, you need some charitable goals. Start writing these down. Let's work together. We need to figure out your lifestyle upgrades. About to get hit with a winter storm that I'm not a big fan of winter storms. Now, again, doesn't mean I'm going to shoot off to Barbados or Epstein Island. Just a joke. Someone won our football poll where you do those grids and Super Bowl thing. And I disappointed and shocked and got the crowd going with, I'm like, yeah, so whoever wins halftime wins 2 free tickets round trip to Epstein Island. And the room got quiet and it got dark. I'm like, just a jokey. So, final years before your retirement, like step one is redefining your work and your purpose and the value of your time. It's cliche, but you're going to have to do it. You want to define the income you need as step 2, not the income you could generate, but the income you need. That baseline includes ongoing debt payments, core lifestyle expenses, insurance costs, healthcare considerations, taxes. To give you an example, I bought a home as a rental 20 years ago that's just now being paid off. And I'm going to refinance it and I'm going to keep that debt. But my goal 20 years ago was to have it completely paid off, largely before I retired, which I'm starting to think about retirement at some point in time. It's just still abstract, and I could go on for another 20 years. I don't know. But I wanted that debt retired because 20 years ago, I thought that was going to be important. That was if things didn't work out in my life, and if things didn't work out in a future marriage who I'd yet to meet, if things didn't work out with my career. But they all did. So anyway, start thinking about this stuff sooner rather than later. If you're listening to the show in your 50s, I think it's important. I do have an event coming up that I would love to see you at Lafayette Library, Lafayette, California, Wednesday evening, 6:30 to 8:30, March 11th. It's a little tough to get to in traffic, but the parking's great. You can sign up for the event at robblackshow.com. That's robblackshow.com. Stephanie Richman, CFP, Nathan Rogers. He's going to be there as well. It's Beyond the Noise, Navigating Wealth in Uncertain Times. Sign up at robblackshow.com, a free in-person event to understand today's markets, to understand your next moves, and to get to meet some financial planners, to get a preliminary financial plan as well as a portfolio review. Stay the course when the markets are uncertain. A couple weeks ago, tech got dumped on. Diversification looked like the winner. Small caps, mid caps did. And then with a little pause that reflected, they all started moving back together slightly higher. Now, again, that's not always going to happen, but you need a steadier, more informed approach. This is a good event for you. RSVP your spot. Sign up at robblackshow.com. I got one more segment coming up. Stay tuned. And don't forget about the afternoon podcast, New Focus on Wealth with me, Rob Black. Sign up at robblackshow.com for more information. It's New Focus on Wealth with Rob Black.
Don't want to work forever? Check out the Retirement Planning Guide on robblack.com. That's robblack.com, powered by EP Wealth.
I'm Rob Black. Thanks for listening to the show. I always have events coming up. I have an event coming up next month. You can find out more about it at robblackshow.com. It's robblackshow.com. Valentine's Day, we're expected to hit a record in spending. It's kind of interesting this year because my kids have off Friday and Monday. One's for President's Day and one is for another day, maybe a teacher work day or something. I'm not even quite sure. But that 4 days off means more love can happen on the weekend. When I'm talking about love, I'm talking about love spending. This year, we're expected to spend $29.1 billion, according to the National Retail Federation. Greeting cards, flowers, candy. Ooh-wee. But there will also be some romantic vacations thrown in there. maybe a little bit of travel due to the prolonged weekend. I'm not getting too caught up in it. It's probably my least favorite holiday, even though it's a big one in the United States as far as spending goes. I really don't like the flowers angle. Although I saw Instacart is now delivering flowers from a florist. Just in case you guys care, think about that. Now, you could also get, this is wild to me, if you want to ruin your relationship, and I highly recommend you ruin your relationship and just hang out with me in the future, get this. Love from McDonald's. If you want to make your honey really, really not happy with you, McDonald's is releasing a free McNugget caviar kit. It includes creme fraiche, which I love adding to baked potatoes. I love adding creme fraiche to scrambled eggs. But I didn't know it went well with McNuggets. So you're also going to get a mother of pearl spoon, a $25 McDonald's gift card, and a one ounce, not a once, but a 1 ounce of caviar. It's all worth about $85. A limited number of kits will drop online tomorrow, February 10th. You got to go to www.mcnuggetcaviar.com. Rihanna and Momofuku made it popular in the last couple of years by adding caviar on their nuggets, and it paired well. Social media, I hate you at times, but if you do get this for your loved one, I give you a big thumbs up, because that's basically saying next stop, divorce attorney. Which the grain of divorce is an issue in America. Let's talk about the share of Americans who say they'll watch at least a few events in the 2026 Winter Olympics. What do you think of the number of Americans? What percentage do you think will watch a few events at the 2026 Winter Olympics? I've already watched a few events. 56%. That's a bigger number than I would have thought. So the AI branding wars intensified with the Super Bowl. Anthropic used the Super Bowl to take a shot at OpenAI, and it worked. The company dropped a series of ads early. One was titled Violation. Violation was pulled in 5 million views on X in under 48 hours. The tagline read, quote, ads are coming to AI, but not to Claude. Claude is winning right now the war on who's going to be the best AI. Remember when you first got into search, you used Alta Vista, you used Excite, you used Yahoo. And then along came the winner who outspent everyone else, was Google. I think Anthropic it's now winning definitively the business side, the enterprise side. Google's Gemini is winning the consumer side. Meta is winning the advertising side of AI. I'm good with that. Perplexity collectively spent more than $330 million on broadcast TV ads for their AI offerings, up 43% from a year ago levels. They've got a ways to go, though. Perplexity makes a search engine that's AI infused, and only 17% of American adults think AI's impact on the country will be positive over the next 2 decades. Okay. Now think about how important the Super Bowl ad was to Apple when you start thinking about Anthropic and Claude and Sam Altman and OpenAI. The 1984 Apple ad, regarded as the one of the greatest commercials of all time, had aired during the Super Bowl and took a direct shot at IBM. Now, again, you're thinking, whoa, was that IBM they were taking a shot, or was it Microsoft? It was IBM. They were suggesting they were the big brother trying to control the world while Apple would liberate you. I'm not sure it was all technically true, but it resonated. And it helped launch Apple's direction that was a great investment if you paid attention back in the 80s. This is a moment that Anthropic begins its valuation ascent past OpenAI, a lot of people believe. The execution at Anthropic and the recent release of Claude has been stellar. Just throwing it out there, branding is just, I'm not going to say just as important as product, but you got to have the product. Amazon's passing Walmart in annual revenue for the first time after hitting $700 billion in sales. Stop and chew on that one for a second. I used to say Walmart is bigger than the number 2, 3, 4, and 5 retailers in the world put together. Now, Amazon, and that was 20 years ago, 15 years ago. Now, Amazon has just passed Walmart in annual revenue for the first time after hitting that $700 billion. When Walmart crossed the $1 trillion valuation last week, I was like, it took 58 plus years to get to $500 billion market cap, and then it took 2 years to get to $1 trillion. Market cap's important because you're basically a biggin. And when I say a biggin, it's a term that I used in my teenage years to make fun of people who were overweight. And I say, oh, that's a biggin. It's not very nice, not very kind, especially since I carried extra weight, but it was my way of just being stupid. So Amazon said that it brought in $716 billion in revenue for 2025. It's up 12% from last year. Annual revenue of $714 billion. Just go write it down. It's a big number. Dethroning Walmart is impressive. I like both Walmart and Amazon. After that, I get really picky with my retail. I'm not saying no to everything, because there's cases like a Williams and Sonoma and a Home Depot and a Lowe's when interest rates are falling. And when homes are more affordable, maybe. So I am impressed with Amazon and with Walmart, and that can be okay, fine. If you want to own both, I think a little bit of both makes a lot of sense. BTI's Jonathan Krinsky talked, and I always like Jonathan Krinsky. He's one of those analysts that I'm not going to use the word resonates with me, but when he talks, I do pay attention. And when he's like on a CNBC, I get the report. Guess who was on CNBC today? Jonathan Krinsky. And I'm like, oh, tell me more. Well, he talked about REITs, and he said, don't forget about me. Don't you? Talking about the 80s and Breakfast Club. Forget about me. REITs are poised for an imminent breakout after a year of consolidation. I like that theme. I like that idea. I'm with that theme. I'm with that idea. Names like McDonald's and Chipotle last year had a sideways to slightly down year. And I think they look better this year because people are still going to eat Chipotle, even if they have what is referred to as a slop bowl, which is what I would refer to the food that I feed my dog at times. And that doesn't say yummy for, you get the idea. Anyway, back to BTIG's Jonathan Krinsky. IYR has been in a sideways trading range for more than a year. So he's talking about an ETF tied towards real estate investment trust. With much of that time spent between $94 and $98, IYR is once again knocking at $98 resistance. We think this time it's likely to break through, given the positive overall market position and strong breadth. This would suggest near-term upside to 102 with medium-term upside to 2022 highs of 116. That's a 20% move. How do you not hear Jonathan Krinsky? I'm not going to say he's more right than wrong, but he's been on the right side of calling markets more often than not, in my opinion. REITs are by far the worst performing sector from the last 5 years. The S&P 500 is up 78% in the last 5 years. The real estate investment trusts are up 12.2%. Tech and energy are up 133% and 150% compared to real estate investment trust 12.2%. Now, of course, that has a lot going on in it with the economy, with COVID, with inflation. But IYR is up 26% over that time. And you can't forget about these names. IYR is not a bad name in the last year. Constructive real estate investment trust charts, according to Krinsky, include Omega Healthcare Investors, ticker symbol OHI, WP Carey, WPC, Ventas, ticker symbol VTR. I'm going to look at all of these because that's what I believe in Jonathan Krinsky. Now, he's talking about a mean reversion in names like Essex Property Trust, ticker symbol ESS, Vika Properties, ticker symbol VICI, Equity Residential, ticker symbol EQR. And he sees a pre-breakout going on with CBRE Group, ticker symbol CBRE, Digital Realty Trust, DLR, and Host Hotels and Resorts, ticker symbol HST. Now, again, is this appropriate for everyone? Absolutely, positively not. But it starts me off on a Monday thinking, what can I be looking at? And I'm good with that. I hope you're good with that. Did you see someone pay $300 for parking at the Super Bowl over the weekend? That's too much money, in my opinion. $300 to park. It's a car payment for most people, or not for most people. Good golly, car payments now $600, $700 a month. Well, it's half a car payment. Can I go with that? You can always find me online at robblackshow.com. That's robblackshow.com. I always have events coming up. I'm going to try to do one event a month this year. So I got one coming up in March. Find out more about that at robblackshow.com. That's robblackshow.com. I'm Rob Black.
Visit The Rob Black Show online at robblackshow.com. Listen to archived podcasts, market updates, and information from EP Wealth's certified financial planners online at robblackshow.com.